Hi, I'm Max Keiser. This is the Keiser Report. The Silver Liberation Army Global Tour rocks on. This past week I was in Dublin at a place called the Grand Social, to a packed house. People came down to listen about the message of the Global Silver Liberation Army. And if you want me to come to your town, send me an email, keiserreport@rttv.ru. There's no place in the globe that should not hear this message. We'll be there. It'll be a rocking good time. Let's get the latest. Let's go to Stacy Herbert. Stacy Herbert, boy, do you look gorgeous.
Max, we've been talking about the global financial crisis led by the global financial terrorists. And they are in the news today, Max. Goldman Sachs misled Congress after duping clients, says Levin.
Senator Levin alleges that Goldman tried to artificially depress the mortgage market in 2007 to amass short positions, and goes on to detail structured securities that Goldman marketed to investors, saying the firm's interests were aligned with theirs. Only they weren't.
Why would Goldman deny what is so obvious, that they were engaged in a huge short in the year 2007? Why would they deny it? Because they gained at the expense of their clients, and they used abusive practices to do it.
That's right. The firm allegedly, knowingly, and let's be honest, they surreptitiously sold, as Mr. Levin calls them, deals to people knowing that they would collapse in value. They made bets against the collapsing value. They made a mockery of their clients. Why anyone does business with Goldman? Who's a client of Goldman Sachs? I mean, they're fraudsters. Look at this Facebook deal. I don't know if you saw this, Stacy Herbert, but Goldman violated SEC laws. They offered a Facebook insider deal to more than 500 investors. The SEC, what was their response? Did they say, oh, we're going to prosecute Goldman, you broke the law? No, their SEC said maybe we should revise the law to accommodate Goldman Sachs. So that's the problem. Goldman Sachs can break the law. If Lloyd Blankfein went down to the post office and he slit some old lady's throat, he would get off scot-free, because he would say, to prosecute me, it's systemic risk. To prosecute me, it's a threat to national security. And if push comes to shove, I'm just going to change the law and make CEO of Wall Street bankers legal to slit old ladies' throats. They're untouchable. It's worse than the mafia. These guys are absolutely untouchable. They're a cancer, and you got to purge them.
So the Michigan Democrat also said federal prosecutors should review whether to bring perjury charges against Goldman Sachs CEO officer Lloyd Blankfein and other current and former employees who testified in Congress last year. Levin said they denied under oath that Goldman Sachs took a financial position against the mortgage market solely for its own profit. Statements the senator said are untrue. So what is your response to this specific case, Max?
Oh, about this specific situation? Oh, well, let me say this about that. Replay Keiser Report from the period when he was making that testimony. And I said explicitly on this program that he was lying. That's what I said then. That's what I'll say now. The guy lied. He perjured himself, okay? That's the reality of it. He should be in jail.
So the panel said Goldman Sachs relied on abusive sales practices and was rife with conflicts of interest. And in particular, in the case of one CDO, Hudson Mezzanine Funding 2006-1, Goldman Sachs told investors its interests were aligned with theirs, while the firm held 100% of the short side.
Yeah, okay. Well, we've been reporting on this for months. The firm has outrageously gone around all the existing securities laws to make billions of dollars. Remember, Wall Street last year paid themselves $140 billion in bonuses by extracting, by rent-seeking, by larceny, by pilfering. You know, how many synonyms do I need to string together before you get the point here? They might as well just go down the street with a club, knock old ladies on the head and steal their money. This is their business plan. If you took away fraud out of the American business plan, out of the UK business plan, they'd have no economy whatsoever. It runs entirely on Freud. Lloyd Blankfein is a schmuck, and he's the worst of the worst. The guy can't even tie his shoes without breaking the law. I don't know how. I mean, Bernie Madoff looks like Mother Teresa compared to this guy.
Carl Levin himself can't say, he has to be prosecuted. He's recommending that the Department of Justice actually pursue a case against Lloyd Blankfein for perjuring himself, which I think it's still a crime in the United States. I don't know how he's going to get out of that in terms of systemic risk argument.
Well, I mean, what does Carl Levin want to shut up? $1 million, $2 million? Whatever it is, Goldman will pay it. Because it's a kleptocracy, there's no justice. Carl Levin won't pursue this because he's a wimp, he's a weak man, he won't do anything, he's a schnagata. You know,
well, it's not up to him, Max. It's up to the Department of Justice. So they're responsible for pursuing the case against Lloyd Blankfein. If Carl Levin says he believes there's a case, it's up to the Department of Justice whether or not they pursue him.
Okay, you're right. I get it. It's going to cost $20 million. It might cost $30 million to get the whole Department of Justice. Whatever the price is, it doesn't matter. They'll pay the price. If Hank Paulson could go in front of Congress and extort $750 billion to bail out his buddies at Goldman Sachs, how much would it cost to pay off the Department of Justice? $10 billion? $20 billion? They just print it up out of their pockets. It's all fictitious fiat currency. There's no justice there. There's no rule of law.
Well, as we reported last week, however, as well, that the Department of Justice never even pursued Wachovia Bank, which laundered $400 billion of Mexican drug money, and they didn't pursue a criminal case.
That's right, Stacy Herbert. They could move $400 billion of the drug money right under the Department of Justice's nose, and their response is, give me more of that coke, baby! I'm high on coke, and I don't believe in justice!
The other thing that has emerged in this new report out by Carl Levin is emails show how Greg Lippmann built Deutsche Bank's $5 billion subprime short, duping CDO fools. So this is Greg Lippmann of Deutsche Bank, and again, they were targeted along with Goldman Sachs as being the worst transgressors of all known like legitimate conduct by a bank in selling derivatives. And they found emails where he was selling to investors bonds that he said blows. Yikes, quote, didn't see that. Half of these are crap and the rest are okay. He calls them a pig CDO. Then he shorted it, covered the short by duping CDO fools. So he said that the CDOs that he was selling were crap and that they needed to find a fool to sell it to.
That's right, Stacy Herbert. It's a daisy chain of fraud. They repackage the same garbage over and over again. They sell to the same chumps, pension funds, managers who are given a huge supply of vodka and cocaine to look the other way while they buy suspicious, crappy CDO products that they bury in the pension accounts. And then a year later, the government will say, we have a crisis. We don't have enough money to pay our pensioners. They don't mention the fact that the reason they have no money is because it disappeared thanks to Blankfein, Goldman Sachs, that other schmata you mentioned, and some corrupt money manager and hedge fund manager and pension fund manager. They're colluding together to defraud the American people, to defraud the global economy, to steal billions, hundreds of billions of dollars, and laugh in the face of people while they're doing it.
Well, you know, there's a big move by the Republicans to water down any of the already watered down Frank Dodd Act, in which these derivatives are supposed to be, given some light of day by being traded on an exchange. But, there's nothing really to protect us from the same thing happening. Nothing on the horizon I see. I mean, there's these reports and vague statements that perhaps Lloyd Blankfein should be charged for perjury. He should be charged for perjury. What about for murder, mass murder, of destroying the global financial system, murdering the entire middle class?
Oh, yeah. Well, yes, as the point was made, that the entire middle class is being murdered with the help of Ben Bernanke over at the Federal Reserve and his little minions over there, Lloyd Blankfein and the rest. And of course, they do much damage than any terrorist organization like Al-Qaeda or any of these other groups are peanuts. They're pikers compared to the mass murder that's happening in the middle class, thanks to these bankers on Wall Street. And of course, like any theological fanaticism, any religious extremism, the people who get murdered by these folks consider themselves martyrs. So Americans who are dying because Miami real estate's now in terminal velocity toward collapse. Las Vegas real estate now terminal velocity into collapse. They're dying in the streets, and they say, thank you, Lloyd Blankfein, for making me a martyr for your extremist cause. How pathetic is that? That's why I'm short America myself, buying gold and silver. To hell with them. They're not worth saving.
Well, here's one person looking to resolve the situation. Jim Grant, America will resolve her debt by returning to the gold standard. Let's take a listen to what Jim Grant told King World News.
Jim, how will the U.S. finally resolve its debt and deficit problems?
Well, in my mind, it will resolve them necessarily by undertaking the step of restoring the dollar to convertibility into gold. We have 40 years of failed resolve in the matter of getting debts and deficits under control. I think the only way to do it is to reinstitute currency convertibility, which would right then and there put us on the road to something like honest money and virtue, fiscal virtue.
Right. Well, the dollar will never be restored to any respectable place in the global economy. It will become extinct, and the gold standard will still be talked about as the dollar is replaced by global currency, probably an SDR-related, Bancor-type, BIS-denominated global unit of exchange. And they're going to try to float another $100 trillion worth of bad debt. And this war between paper pushers and the psychos on Wall Street and the gold bugs, like Jim Grant, will continue. And the price of gold will continue to go higher. GFMS just came out and said gold's going to $1,600 this year, on its way to $10,000. Silver's going to $500. So you have to ask yourself, what side do you want to be on? You want to be on the side of worthless paper or escalating in price precious metals? It's up to you. Stacy Herbert, that's all the time we have. Thanks again for being on the Keiser Report.
Thank you, Max.
Don't go away. Much more coming your way, so stay right there.
Life in Russia would be so much brighter if you knew more about someone from first impressions. Meetfriends.rt.com.
Hi, welcome back to the Keiser Report. Time now to go to New York and talk with Janet Tavakoli of Tavakoli Structured Finance. Janet is an expert on weapons of mass financial destruction, otherwise known as derivatives. She is also the author of Dear Mr. Buffett, What an Investor Learns 1,269 Miles from Wall Street. Janet, welcome back to the Keiser Report.
Hi, Max. How are you?
Fantastic. Janet Tavakoli, since we spoke last, the tide has gone out on Dear Mr. Warren Buffett. Apparently, he's not wearing any shorts. Now tell us about the departure of his heir apparent and the whiff of front-running insider trading, what it says about the bigger picture in U.S. banking. Janet Tavakoli.
Well, Max, this has been a case of telling the truth slowly. I think you're aware that Warren Buffett issued a press release, a memo, talking about the departure of David Sokol, who was the head of Mid-American Energy. And David Sokol was also somebody who looked at acquisition candidates for Berkshire Hathaway. Now, as the facts are coming out, it appears that he was in a meeting with Citigroup bankers on December 13th, and the next day he bought shares in a country called Lubrizol. Now, in a company called Lubrizol. Now, the day before, the Citigroup bankers understood that they were talking to David Sokol in his capacity as an officer of Berkshire Hathaway, in a capacity of an officer who evaluates potential acquisition candidates for Berkshire Hathaway. That seemed to be their clear understanding. And in that meeting, David Sokol asked for a meeting with the president of Lubrizol. So he sought that meeting. And on December 17th, we now find out through Bloomberg News that on December 17th, the Citigroup bankers gave feedback to David Sokol that the president of Lubrizol, was going to bring Berkshire Hathaway's interest forward to the board of directors at Lubrizol. So it's pretty clear that he had information that the public didn't have, that this was a potential acquisition candidate for Berkshire Hathaway. And in the past, the stock prices of acquisition candidates of Berkshire Hathaway have popped up. So after all of this go-around, David Sokol is buying shares in Lubrizol, saying that he had an interest in it for his personal account before he met with the Citigroup bankers. None of this sounds plausible. But what is really harmful to Berkshire Hathaway is the attitude taken by Charlie Munger and Warren Buffett, who have always said that we hold ourselves to the highest standard of corporate governance and we wouldn't tolerate this kind of behavior. And the press release looks an awful lot like covering up and excusing insider trading. Now, in that press release, Warren Buffett said that it is neither David Sokol nor I believe that he did anything unlawful. Well, here's the problem with that. I actually believe he did something unlawful. Now, that's my opinion. But it's also the opinion of a lot of other professionals. Now, I don't speak for them, I'm speaking solely for myself. So the problem is that the press now has gotten onto this for a couple of reasons. One of the reasons is that within that memo, uncharacteristically, Warren Buffett said, if anyone has questions about this, I'm going to refer them to this press release, to this memo. Well, in the past, he's always talked about transparency and how he's willing to entertain any question. At the shareholders' meetings, he'll entertain any question. Apparently not on this topic. So why the lack of transparency here?
Right. Well, I mean, Warren Buffett, as I've been saying all along, and we've talked about this before, he's overrated. If you strip out a lot of the back channel dealing, the insider trading, the market manipulation, the cozy relationship with Goldman Sachs and the banks on Wall Street, you strip out that from his performance, you're back to, not much better than the S&P. So once again, but the thing about Warren Buffett, though, unlike other shysters connected to Wall Street, he's got this facade of the fatherly grandfather who is above the fray and who is everybody's, really the moral rectitude is to be emulated. But we find out at the end of the day, he's a schmuck like everybody else. Now, what about Buffett's recent testimony to Congress in which he claimed that nobody could have seen the collapse of the housing market coming? So Moody's and other rating agencies were excused for giving mortgage-backed securities AAA ratings. This seems like outright duplicity on Buffett's part, without a shadow of a doubt, Janet Tavakoli.
I'm glad you brought that up, Max, because you're aware that I wrote this book called Dear Mr. Buffett about the financial crisis, where I was contrasting the principles of Benjamin Graham that Warren Buffett espoused and Charlie Munger espoused to what happened during the financial crisis. And I think the preliminary draft of my manuscript came out in July 2008. I sent it to Warren Buffett. He looked at it. He liked it. And in there, of course, I'm a big critic of the rating agencies, and all along I've been criticizing the rating agencies. Warren's on my distribution list. In February of 2007, I wrote a letter to the SEC, and by the way, he reads my stuff. He occasionally gives me feedback on it, and I wrote to the SEC saying that the rating agencies should have their NRSRO designation revoked, that the AAA ratings were phony. I gave an example of a phony product that was rated AAA, that within a year the investors lost 90% of their principal, and I was warning about it when the product first came out and was rated AAA, and that was in my letter to the SEC, which is still on their website. So it's not as if he didn't have the facts in hand. Yet,
right. Well, let me jump in here. I mean, the SEC gets letters every day. They got letters 2 or 3 times from people who pointed out that Bernie Madoff was a huge Ponzi scheme and it should be shut down. They didn't act on it. The SEC doesn't act on any of these letters. They're a captured regulator. They're understaffed on purpose.
Max, yes, I think you're being unfair to the. I think you're being a little unfair to the SEC. Of course, they have acted. They've acted to help cover up.
Wait, let me cut in right there, Janet Tavakoli, because just this past week, we have a situation with Goldman Sachs. Goldman Sachs broke the law. They sold Facebook insider stock to more than 500 investors without giving full disclosure of financial details. That's against SEC law. The response of the SEC was to say, well, maybe we should rewrite the law. I mean, if I slit somebody's throat, can I go to the judge and I say, Judge, my defense is that you need to rewrite that law? Why doesn't Warren Buffett, Goldman Sachs, JP Morgan, what about complying with the law?
You know, Max, the camera got so upset it moved while you were talking. I agree with you, and the SEC has allowed them to get away with form over substance arguments. And, they're just simply not doing their job. Well, they are doing their job as they see it. They just haven't announced to everybody what their job is, and that's to enable cover-ups, to basically distract people with non-issues, to, nail people on minor issues, issue minor fines, and then declare victory. You know, we are being totally punked here by the regulators. The SEC should have been disbanded. Mary Shapiro, who was the head of FINRA, if you look at FINRA's track record, investors would lose arbitration, and the ones that they won, they would recover less than their losses.
Let's move on to Wachovia Bank, now owned by Wells Fargo, which of course is Warren Buffett's pet bank in California. They just paid a $160 million fine for laundering nearly $400 million in Mexican drug money. Why no prosecution, Janet Tavicoli?
Well, you know, I think there's been no prosecution because, again, of our captured regulators. When you look at the horrific press that this has gotten, where basically Wachovia was laundering money for a Mexican drug cartel that is killing Mexican citizens. So basically, the United States has helped aid and abet this through vehicles like money laundering through Wachovia. And Wachovia Bank, by the way, wasn't alone in that. But these are very serious issues. And that's not the only serious issue that Wachovia had. You recall that Wachovia bought Golden West. Those, you know, loans from Golden West, many of them were just circling the drain at the time that Wachovia bought Golden West. They were securitizing those loans. They had a problem with the CDOs that Wachovia put together. Wachovia was also acting as intermediary for toxic CDOs from other investment banks. They were scratching each other's backs. Wachovia was marketing the commercial paper of Mainsail 2, which was a toxic structured product put out by Barclays, and they were marketing that up and down the California coast, and they're being sued right and left over that. This bank didn't have just one governance problem, just one kind of management problem. It was riddled with management problems, and you know, our Treasury and the Fed allowed a merger of a bank like Wachovia, first of all with Golden West, and then Wachovia with Wells, weakening stronger banks. And of course, you know, a lot of behind-the-scenes double dealing was done to accommodate a merger between Wells and Wachovia, including an unconstitutional change of the tax rules to allow Wachovia to be able to write off losses, Wells rather, to write off losses from the Wells merger on an accelerated basis.
Yeah, first you have $400 billion in Mexican drug money laundering. Then you've got hundreds of billions in loss laundering, effectively accounting fraud. Again, Wachovia, again, part of Wells Fargo, again, over, under Warren Buffett's watch. This guy is really just Bernie Madoff with a nicer suit, maybe. No, I should correct that, with a cheap suit. He's Bernie Madoff with a cheap suit.
Max, I think you have to be careful what you hold people accountable for, because I look to the Wells management, Wachovia management for that. But with Warren Buffett, his lack of his what I would call reverse moral suasion is what's really been the problem, because he has a lot of influence, a very high profile, a lot of capital and goodwill built up over years through brilliant PR, and in managing that very effectively up till now. In some cases, he's had some warts on that, as Jonathan Weil of Bloomberg was happy to point out for us. And as John Gapper said in a recent Financial Times article, basically to the international community, he looks like he and Charlie Munger look like the Beverly Hillbillies of finance, you know, spewing out these big platitudes. But now when you look behind the platitudes, you find out that there's something darker going on. And I kind of trace that back to about August 2008 was when I really saw this fall off the cliff. Warren Buffett was on a town hall panel after David Walker's piece called IOUSA, talking about the big debt that the U.S. government was getting into. Now, this was a month before the bailouts. And Warren Buffett broke ranks with everybody on the panel, including David Walker, Pete Peterson, a number of other people on the panel. And he was the only one that broke ranks. And he basically tried to minimize and undermine the entire message of the movie and of the panel. And basically he said, the United States, you know, we're good for it, we can produce our way out of all of this big debt. But I think he knew that the Fannie and Freddie bailouts were coming, and that the AIG bailout was coming. And I think that's why he did it, because there was going to be this huge windfall. Instead of prosecutions, we blew financial kisses in the direction of Wall Street, and I think he knew about it, and I think that's why he did that. And ever since then, his dialogue has been to minimize the damage to investment bankers. Instead of saying, oh, I can't, look at these micro issues like who should be prosecuted, I'd like reform of the tax code. Yeah, well, the tax code can't touch him now because he's already sequestered his own assets and taken advantage of previous tax rulings. So there's a huge wave of hypocrisy and the appearance of I'm doing the right thing, while meanwhile, unfortunately, too much of his public dialogue has been against the right thing. And now that this insider trading memo has come out, a lot of people in the press, first of all, they were confused. They were actually ready to believe that there isn't an insider trading issue here because Warren Buffett said so. That's how powerful his PR is, until a lot of rational people just said, oh, please, you're not buying that. Obviously, there's a huge insider trading issue here. It should be investigated. And if David Sokol doesn't go to jail, and if Warren Buffett isn't seen to be covering up, it's not because that didn't happen. It's because we have a captured regulatory system.
I saw that response with Buffett in 2008, and it was quite shocking. And he himself says famously that when the tide goes out, you see who's not wearing a bathing suit. And the tide went out in a big way in 2008, and it caught up with Warren Buffett. Warren Buffett couldn't keep up with the losses, and he was exposed. His deal with Goldman Sachs was a complete sham that embarrassed the government and embarrassed every American, really, that he would get this privileged insider deal to help out a bank that committed fraud and should have been, these guys, Lloyd Blankfein should be in jail already. And there's Warren Buffett holding him up as a moral example. And it's quite shocking. Well, it's not shocking. All right, well, Janet Tabacoli, thanks so much for being once again on the Keiser Report. That's going to do it.
Bye, Max.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Janet Tabacoli. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.